What would your portfolio look like if you started over knowing what you know now? That's the question today's guest, Michael Alberse, is answering in real time. He's a 27-year-old Googler from Atlanta who's documenting his path to $15,000 a month in passive income, and he's already crossed the $6,000 a month mark. And what's interesting about Michael is that it isn't that he's figured it all out. He actually calls out that his current mix is a Frankenstein portfolio. It's a blend of private loans, dividend ETFs, small business lending, real estate syndications, and even a mobile home park deal. But he's experimenting publicly, sharing what's working, what's not, and how each move gets him closer to true financial independence. And in this episode of the Passive Income Playbook on the Best Ever CRE Show, we dive into what investors can learn from how younger investors are testing private credit, dividends, and alternatives, the real-world performance of dividend portfolios versus private loan strategies, why chasing yield too fast can create unnecessary risk, and what he would do differently now, how he's documenting those results publicly and how that's changed his investing discipline. And if you've ever wanted to stress test your own approach to income investing, or you're curious how a new generation of investors is building cash flow outside of the stock market, this conversation will give you a fresh perspective and a few ideas that you can put to work right away. Let's dive in. Hey, Michael, thanks for joining me on the show. I'm excited to have you here.
Really excited to be here too, Pascal. Great to see you.
Okay, so Michael, for all of those who don't know you, I would love to set the frame. You are someone who has been online, that's very young, that has been focusing on how do I grow my passive income. And I think online you're known as micro.investing.
That's right.
Is your handle. And so Michael does some great content on Instagram, I think is the platform I follow you the most on. And he's documenting his journey to 15K. So you are now at 6K, and you've done a whole bunch of different things as you're documenting your journey through that. But tell us, what made you start sharing your journey publicly? And
That's a great question. I started sharing the journey about a year and a half ago. I had previously tried to film content kind of on budgeting basics with my wife. But after 3 months of doing that, my wife absolutely hated it and did not want to be on camera. So I needed to pivot, and I still wanted to post content. And I had started to consume a lot of information on passive investing, but I always thought that it sounded magical or too good to be true. And I didn't want to be a YouTube guru kind of talking about all these different things. I said, I'm going to commit myself to this journey of creating passive income and see what it actually takes. So the first week that I started posting content, I was just making $161 a month through high yield savings account interest. And I was very upfront from the very beginning of the journey, saying, I have no idea what I'm doing, but I'm going to document this journey to 15,000. Who knows how long this will take me? And that's what I've been doing for the last year and a half now.
That's awesome. Okay, so you started with that investment. Walk us through, how did you decide to start there? It's very common that people have this kind of vision or dream to build a huge passive income portfolio. I have the same one, and so I resonate a lot with your journey. How did you pick that vehicle?
I think I have always wanted to have lifestyle freedom. I love to be outdoors. I honestly just want to be out hiking in the woods, and I would love to have income coming in whether I have cell signal or not. So I would love to have this portfolio where I can check in on it and I can make investments, and I have a business and everything's kind of just bringing in cash flow. But at the end of the day, I love being a passive investor because of the lifestyle that it brings in. In the future, I would love nothing more than to just live on a farm and have a tractor and do a bunch of manual labor. So that's my ideal dream life. So I want to create a passive income portfolio as young as possible that if I'm really feeling energized and want to grow a business, I can absolutely put all my energy into that. But if it's the stage of life where I don't want to do that, then I don't have to. So I think that's kind of where I'm going. And I have started with some really good basics too, even from a couple of years ago. I've only been working for 4.5 years now, but just started with really good budgeting basics and try to keep my lifestyle in check and just have been plowing as much into passive investments since then.
So give me investments one, two, and three, and how you picked them.
Great question. So I would say my base is all the normal stuff that is talked about online. So, the Roth IRA, the 401k from work, and the HSA. And then I started to put extra money into a taxable brokerage account. After I did all of those things, I was looking around like, what's next? So I actually invested in it's regulated material management. So it is an industrial cold storage facility business in North Carolina that a family friend had actually grown it in Virginia for the last 15 years or so. That business was bought. He let the non-compete go, and then he wanted to do the same thing again in North Carolina with the same playbook, but just with a slightly different team. So I actually invested in that team, and that was my first private alternative investment. And that was a hybrid because there was some land that was being purchased, and there was also this big, really locked down, secure cold storage facility. And this is not for food cold storage. This is actually for things that hospitals will need to store, or even stem cells or other infectious disease research. All of this information needs to be archived in a secure location. So this is a very high moat barrier to entry business. And I knew the people who were going to be operating the team. So that was my first investment outside of the stock market, and it went very well. We actually exited just over 1.25 years into it when that was supposed to be a 10-year investment. But we just had one of those once in a lifetime opportunities where private equity came in for a really great deal. So that was a very high multiple on my capital in a very short period of time. So that was my first experience.
That was a 9x.
That's right. Pretty insane first go around. So that is what's really helped me get into the game quicker too, and then get into the next investments.
And probably get hooked.
That's right. Yes. I'm like, this is the only opportunity that you can do something like this. So after that, I think I took some time to let that capital sit, and I wanted to figure out what I wanted to do next. So I've done a couple other deals. I have helped a local ride sharing business lease more electric vehicles for their fleet. So that was a short-term loan that was too good to be true. They were offering 20% returns. And I said, this sounds great. When I joined the call with them, they said, you know what? We're actually going to do 30% returns for you. I thought that was a little bit strange that they would just, proactively offer additional returns, but being very early to this space, it was intriguing for me to try to get a high return. So I'm grateful I did not put a lot of money into that deal. I ended up putting $10,000 into that loan, and I lost about half of that when all was said and done. So just very transparently, it's been amazing posting the journey on Instagram, but the downside is it also it made me want to move very quickly, that I sometimes was rushing into deals or overlooking red flags just to try to get my passive income numbers a little bit higher on Instagram. So that's a good lesson I learned from this one.
Yeah, definitely. And I guess okay, you had this amazing initial success, right? Got into some deal through a family friend, and then maybe not necessarily got cold feet, but I'm sure you learned quite a bit. What was the big main takeaway there? I mean, obviously things can be too good to be true. I think when I come across all the investors that come through my door, they're either very green and they're searching for yield, and that's their number one thing that they're looking for. And, they're trying to look at 15, 20, 30%, IRR or cash on cash or, type funds. And then there's the people who know what a 10 or 15% risk adjusted return is pretty what they're looking for.
Right.
How would that compare for your experience and what you've taken away?
I have tried to just get as much experience as young as possible. And that means I've done, 7 to 8 deals at this point. And I've created a Frankenstein portfolio because it has just been chasing that yield a little bit. But over time, as I've done more deals, and some that have gone south is I want to invest in an experienced team, but people that are also just, they are professional, but they are also absolutely obsessed with their asset class or their industry or their business. That was one of the biggest learnings from the cold storage business. Was the CEO was obsessed with that business. It was all he focused on. Some other people I've seen, they would prioritize their lifestyle, or maybe they are raising capital on the side, or maybe this is a side hustle for them. But what I've realized over time is I want somebody who this is the only thing they think about day and night. Because if I'm going to give away the control of my capital to somebody else, I want to make sure that they are great stewards of that money.
Love the takeaway. I couldn't agree more.
Obsessive.
Thinking,
That's the word.
yeah, I think in real estate, there's a lot of, or at least in the capital raising space, if you're trying to be a passive investor, there are a lot of people that are hodgepodge teams that kind of like link up. They're not like a company. They're like four
Right.
people coming together doing a deal. And everyone's got to start somewhere, but I feel like that's unnecessary risk. So you also have done quite a few other things. You do single asset loans, like you've given this cupcake business a loan. You've done some high yield ETFs. You've also been in a mobile home park. Talk to us about those. What led you? I mean, trying out all the different ways to get some income. What have you been learning?
I've just been trying to go through the debt and equity side of multiple asset classes. So I have done debt or lending in real estate, and as well as equity. And I've also done debt and equity in small business acquisitions. So a good example is I had a partnership come to me and they wanted to buy a distressed cupcake business about an hour away from me in Atlanta. So they were going to be buying it for under the asset value of the actual bakery. So this business had previously been cash flowing, but was not in a current good state. So between the partnership team and me, the entire purchase price of this business was just $40,000. And I gave that team $35,000 as a 15% interest loan for 1 year with a 5% equity kicker. So I had 3 months of delayed payments to start, and I've just been doing interest only payments. So that one has been paying me $583 a month for the last 9 months. And that loan actually matures November 1st, 2025. So that team has already lined up a loan to come in and pay my money back. So that's a great first swing at doing the debt plus equity style deal, which is very rare. So I'm proud of myself for doing that. But it's still a small acquisition at the end of the day. But I'm proud for this opportunity. I could actually go visit the business. I was there on grand opening day, so that was pretty fun, and it's very memorable online.
So I imagine that sounds like the most insane amount of risk that you could possibly take. Like I would never do a deal like that. And it sounds like you would do more of those. Tell me why.
Well, okay, first of all, there was collateral here. So this is a secured promissory note on the assets of the business. So I had written down all the different like machinery and things in there as collateral against my loan. I would not do another deal like this again in the future. I'm glad I did this for learning, but I really couldn't do much to actually help this business. This business is way too small to make an impact. I can't really feature them on my social media platforms. I can't bring these cupcakes to events I go to because it's an hour away with no traffic in Atlanta. So I've actually only been to this facility one time. So I've learned my lesson. I want to take, bigger swings that will just be able to compound over a lifetime. And this was a great short-term deal, but I won't be doing small business acquisition deals that are this small again in the future.
How about lending to a small business in general? I feel like with how much small businesses fail, and it's not like you can. I mean, I guess you had some of the machinery and whatnot, but maybe a little bit harder. I mean, I wouldn't know how to sell all of those assets if I had to
Yeah.
take over the business, right? Let alone like, do I want to take over someone else's property if they couldn't meet the loan obligation? Yeah, how do you think about that?
I think there depends on the business. Some businesses are just online businesses, and that's something that is pretty much impossible to lend to because there is no collateral. So you need to make sure there's some type of asset there that you are actually lending against. And there's so many unknowns in small business. And I think that's something where I saw small business about a year ago and just looking for yield. This is the asset class with really high returns. Like, let's go into this micro private equity space, as I've been calling it, because yeah, sure, maybe there's higher risk, but the returns are great. And after a year kind of investing in these types of deals, now I understand why the risk is higher and the yields are higher correspondingly. So I think lending to a business, you have to be really careful with their cash flow. You need to be really careful with their operating team, and they need to have a really good grasp on all of their expenses. There needs to be an ability to really raise revenues too. And there also needs to be good assets that you can underwrite and liquidate if you need to be made whole.
Yeah, absolutely. Okay. And then you ventured also into high yield dividend ETFs, which um my experience with them is that, you can get these distributions from them, but if the stock market tanks or, you still have the volatility of the stock market. So, when my dad passed away, I watched him, he would invest in these dividend stocks and he would make 6 to 8% a year. And then the stock would go down and would wipe out his gains for the year.
Mm-hmm.
And it never made sense to me. How has been your experience? You're doing more covered call type strategy. Talk to us about that.
So my thought process there was I wanted to create another income source pretty quickly. And that is one easy thing about buying something like a covered call ETF is you could log into Vanguard or Fidelity and you could buy it today and start to get some gains from that. But there is still that underlying volatility. There is a sweet spot. I mean, there's dividend ETFs that pay 3 to 4% a year, like SCHD, that's Schwab's US equity. And then there's these crazy ones that something like a Yield Max will do called Misty, or, other ones that trade covered calls on Bitcoin. And those are like 100% annual returns, but they do that at the expense of their actual principal. So their NAV erosion is crazy and their value just goes into the ground. So if you invest in something like that, you have to get your capital out of it as soon as possible and know what you're getting into at the end of the day. I've kind of gone for this middle ground of 10 to 12% yield dividend ETFs that are writing covered calls. I have seen people lose money on options, and the stock market is such a perfectly efficient game with people just trading in thousands of a second, way faster than any retail trader can. We're never going to win in that game. So if I wanted to create some income from stocks, I at least wanted to let the pros or at least the algorithms do it for me. So that's why, at least to get some exposure to covered calls, I've dabbled in these a little bit.
Okay, so looking at like SPYI, QQQI, JEPI, JEPQ, those types of things. So,
Yeah.
so how have you thought about the volatility that I talked about? How do you view that? Yeah.
This is something that I see as a short-term player in my portfolio as kind of a cash flow cushion. But ideally, I would rather sell these at some point and put it back into some type of real estate deal where there will be equity growth in addition to the cash flow. Because, we don't want cash flow at the expense of the equity or the principal. So it's definitely not something that I haven't put any additional funds into. I've kind of just been letting these grow, but I'm not going to be, creating a larger position here.
I get that. Okay, and then you've gone into additional strategies like mobile home parks and buying a multifamily. To talk to us about that transition.
I know it's crazy all over the place, right?
I know.
So when it comes to the mobile home park, that is a syndication. So that was the first syndication I've ever done. I actually joined as a 50B for non-accredited investors, which is very helpful. So this is through somebody I know who is only focused on mobile home parks, which is what I wanted, somebody who's really focused on that asset class. And I have really loved my experience, to be honest. I love reading the monthly investor reports. I didn't realize that so much of mobile home park management is really just trying to provide a better environment for the tenants and people living in the park. So they went in, they got rid of all the junky cars. They have somebody actually cutting the grass. They're improving their mailboxes, improving security, filling in potholes. It's really cool to see what they're doing. And the cash flow there, I am amazed with the net operating income in mobile home parks. And the cash flow has been steadily going up every quarter. And I also believe that mobile home parks are a far more inefficient commercial real estate market, that there's still a lot of opportunity to find great deals to build a portfolio, and then somebody like private equity could buy it in the future. So I like mobile home parks for the cash flow and then also the equity growth there. And there's also a lot of tax benefits like depreciation there too.
Yeah. And then you dove into multifamily. Do you feel like are you in the point where you're trying to just try out different asset classes? Are there certain things that drew you to each of these? How do you think about that?
Good question. These were more operator driven for me. So I'd more so been keeping my eye on certain people and then wanting to dip my toe in on smaller deals, because starting out, there's no way I can go into something with $100,000 because that would be a huge chunk of my net worth. So a lot of these deals were starting around the 25K point, and that's what allowed me to get started. But I wanted to bet on the right jockeys, also with a good horse, a good deal. So trying to find both of those things when they aligned. When it comes to the multifamily deal that I did with a great operator, that one's actually a joint venture. It's just a 10 unit. So it's not a massive building, but that one's been providing about $400 a quarter in cash flow. It should be a good 8 to 9% cash on cash return. It'll be a solid. It's not going to be a home run, but it's a good solid. And at this point, I really don't like losing money. So I'm very happy with singles, and I would rather not lose the capital.
I hear that. Okay, and so now you've gotten to the point where you have over $6,000 a month in passive income as a 26-year-old.
27. So
27,
old.
yeah. Sold. Okay, and I guess what is the makeup of that today?
So the majority of that is actually from private money lending, and that is on single asset fix and flips, which, there's lessons in that in itself. But in general, I have been going for the higher cash flow opportunities, and a lot of that has been through private money lending. Some of the other big sources of income, kind of on my pie chart where I show the passive income, are those high yield dividend ETFs. And then there's some of those quarterly distributions from the other deals as well. And then there's also the cupcake business loan. But by far, real estate private money lending has been the biggest cash flow factor. But in the future, there's just a lot of risks with a bad seller's market, and you never know when that house is actually going to sell or for what value. I have structured those notes that they were for monthly interest payments. Some other people will do private money lending, but then use a profit share at the end. I think if you don't need cash flow, that is a good way to do it, but you have to be really confident in the operator, and you also have to be really confident in the after repair value and the market. And these houses are in Florida, which is a notoriously difficult market right now. Gratefully, one is under contract right now, and the other one is still in construction. So I will have that capital returned in about a month or so. So I'm very grateful for that. But in the future, I would much rather spread out my risk among many assets from people that are professionals and writing loans and doing due diligence in something like a private credit fund. I don't want to be, getting all these deals in my email and trying to vet them and then sending out the capital and just trying to get a personal guarantee. I want somebody who is obsessed with doing this full time, and I can sleep amazing at night, not worrying about this capital.
Got it. Okay, so you've done all these things. How do you see your strategy adjusting moving forward?
Well, there hasn't been too much of a strategy till this point. It's been a lot of learning, but I want to actually start to break apart that Frankenstein portfolio, as I called it, and have a strategy moving forward that is focused on cash flow at the forefront. So I'm looking at building a solid base through things like private credit. I've also noticed that my real estate deals have all gone well, and some of my small business acquisition deals have not. So I want to focus more on building a great base with private credit, real estate. I am looking also into doing my first smaller oil and gas deal in a non-operated drill co. So that is going to be an experience too, but I'm putting a small chunk of my net worth there. It's also something that provides great cash flow as well as those tax deductions against my active income. I'm mainly focused on cash flow. I want to get that to a great spot, build it up to that $15,000 a month number. And then I really would just want to put it as much into those equity growth or equity and cash flow hybrid deals in the future.
How do you think about, right? So like you're, I think there are two buckets that, three buckets I think that people fit into. It's, you're 27, you have a full time, you work at Google, and so you're able to plow kind of all the money that you make back into investments. And
Right.
I think Avatar one is, hey, I have a bunch of cash flow from my job. I don't need additional cash flow. I want to invest them in high equity things only. And then on the other side of the spectrum, you have people that are like only cash flow investors, and then there are people in the middle that um, have some equity growth and some cash flow, but they're very different mindsets. And why do you think, do you have an equity portion of your portfolio, or are you all in on the cash flow part?
I think the majority of, and we've talked about this a lot, but the majority of my portfolio is in equity at the end of the day. I think that's what most people have just coming into this world. They have a lot in stocks, like locked away in their IRAs and 401ks. So the vast majority of my net worth is still in these growing equity deals. And there's also, the real estate deals I'm involved in. I've been growing kind of business ownership as well. So there are other equity plays going. So now I actually want to become more weighted into cash flow because I feel like it's something that I have a actually very small amount of my portfolio in.
Got it.
But you can overdo it for sure. You want to make sure, in my opinion, that the monthly expenses are covered so you have some optionality. I totally hear people where they say they have a full-time job, they don't need extra cash flow, but you never know when that job could vaporize in front of you. So I think it's great to be in a position where you have just a lot more, at least options. I wouldn't say control because control is very difficult, but more financial options is something that I've been striving for.
You've also put a lot of effort into your education. And I know that because we work together, and then I know that you also participated in the Lifestyle Investor program. Have you done any other programs, and kind of walk us through what made you decide to get the education to begin with?
I started by reading books, and books are a great way to get started just to get the base education. But a book can only do so much that the next obvious step after you read a book is, okay, well, where do I go to actually find these deals? Or where do I go to find other people doing things like this? So I was already part of another mastermind group called Action Academy. And in that group, there's other people who are buying the real estate or buying the small businesses. So I started out by funding some of their deals. And then in the future, the more I invest, the more I realize I don't know and how much I can, use the experience of other people and get mentorship and just way more wisdom than I have myself to put into my own investing. That we worked together on the Grow Your Cash Flow. And that was really helpful for me to understand how to become a better passive investor. Focusing on LP investments and private credit funds is very helpful for me. Got much better at due diligence too. And then I've also been a part of I'm currently part of the Lifestyle Investor Foundations group. So that is for the younger crowd that's kind of getting started out. And I went to go to an in-person event in Austin, Texas, and met all those people. And It's pretty amazing because there are so many folks in their 40s, 50s, and 60s there, and they all still have that student mindset. And every time somebody would ask me my age, it would come up and they would just say, man, I wish I was in your shoes. So that helped me understand I was in the right place. And I could talk about this stuff all day long. I love looking at deals. So I know I'm in the right spot, and I love being around other people who are doing that too.
Let's get into some of the specifics. What do you think are maybe some tangible things that changed the way that you invest in any of these educational programs?
Or it changes how I invest into education, like what I choose to invest in?
No,
Or
no, no. Yeah. I mean, like, so you mentioned you improved your diligence process.
Mhm.
What are things that you took away from these different programs that are
Totally.
tangible that someone could be like, oh, I used to do that, and you know,
Totally. I would say there's a couple things. First of all, don't put all of your eggs in one basket. So I used to, when I felt more conviction in a deal, put in more capital. Now at this point, I give myself a max. So if you're going to Vegas, you want to give yourself a max on what you're willing to go up to. So for me right now, I am not willing to put more than $50,000 into a deal, which that can still seem high to some people, and it can seem really low for others, but I need to make sure that I'm balanced at my current age. I've also learned a lot more about taxes in the last year, which has been very helpful. So I do have active income from my full-time job at Google. I also have active income from a business. I also have this passive income, and I make content. And so all these things I need to actually start to capture my expenses and have that being offsetting of my active versus passive income. I didn't understand taxes pretty much at all a year ago. And going through this, actually hiring a CPA is some things that have made some of the biggest impact on me. And nobody else my age has that I know of has a CPA. Like they do everything themselves with TurboTax. They're not doing this type of investing. So I needed to be in the rooms with people who this is very normal to have a financial team around them. And that's been a lot of tangible learnings for me. I would also just say too, like having the strategy and not leaving my job early or taking very high risks. I have seen people who are really needing to get out of their job, or maybe it will kind of force them to get into a bad opportunity or to buy and acquire a business because they think that'll create their freedom, but it's actually way more work for less pay. So I wanted to be very careful about the moves that I make, keep my job, grow my business, and then just plow as much as I can back into investments, as you were saying. So the biggest takeaway for me at the end of the day too is passive income comes from active income. And I need to make sure that I have a really core active income source or a multiple, because that's what creates these sources at the end of the day. So I want to make as much active income as I can. And then I want to connect with amazing sponsors who will be good stewards of that capital and grow it.
yeah, kind of along the lines of once you cut off your active income and you're living off of your passive income, you've kind of stopped the compounding.
Right.
Right, and you're not growing that passive income anymore.
You're just taking your foot off the gas a little bit, and everybody's in a different place in life, and that's okay for some people, but I definitely want to keep going. I've got a long ways to go still.
Yeah, definitely. Michael, this has been awesome. Where can people find you, learn more, and follow your journey?
I am at micro.investing on all socials. So it's Instagram, TikTok, and YouTube. And I just post a once a month newsletter. So I only send out one email a month. And that will include my passive income breakdown and kind of what I've learned over that last month or so. So I'm very transparent with the finances. I am always open to coaching and feedback too. So I would love to hear anybody's thoughts on portfolio or investing in the future.
Love it. All right. And for if you want to take kind of what you've learned today to the next level, I encourage you to join me at the Best Ever Conference, which is happening February 18th to the 26th in Salt Lake City. I'll personally be there. I'll be teaching a dedicated LP workshop. And it's also just one of the best places to, build real relationships with GPs and other LPs in the industry. As a quick plug, tickets are just $695 right now, and they will go up. They go up every year, I think a grand or 1,200. So if you're interested in going, I definitely recommend locking in your spot early. And another thing to note is that if you're looking for more interviews like this one, or you just want access to cash flowing opportunities that you can invest into as a passive investor, we find all different types of deals, click on ads, different fund manager groups, and we aggregate all of that into a database, and we share that with the investors on our list. And you can grab that at passiveinvestingstarterkit.com. And that list updates weekly, so you always have most up-to-date information. If you enjoyed today's episode, please take 30 seconds, reach out to us on LinkedIn, or leave us a review here. It helps us reach more investors like you. And as a reminder, this Passive Income Playbook, part of the Best Ever CRE show, we drop episodes every Thursday. And so we would love to see you at the next one. So thanks again for tuning in, and we will see you next week.